What's up, everybody? Michael Silva here to do a technical analysis update on the S&P 500. We are looking at the SPX. The question today, and the question that's been on everybody's mind, is when will this bubble pop? When will the charade end? Are we even in a bubble? I mean, I think we are. It just doesn't seem like the stock market is reacting to any bad news. Now, I know you've already seen these numbers, heard these numbers. They are mainstream, but let's just talk about them at a glance. This is from Yahoo Finance. Shed a record 20.5 million payrolls in April, and unemployment rate jumped to 14.7%. Yikes. This right here is the total assets of the Federal Reserve. This is right from their website. Look at this rocket ship of just look at this rocket ship that took off. If you haven't seen this by now, I'd be quite surprised. But we're talking from its low here to its high level. That's $2.96 trillion since August. That's a 78% increase. It's crazy. The Fed's balance sheet expanded by $2.4 trillion in the past 8 weeks alone. But yet, even despite all this crazy stuff that's going on, it still seems like the stock market is having the time of its life. I pulled this chart up and I wanted to just share it really quick. Got some comments on it. I posted it on my YouTube, but I didn't really analyze it. But this is just to show you and give you an idea. This was through 2000 to 2002. This is just to remind everybody what bear market rallies look like. Now, we're obviously living in different times, but this is really to just paint a good picture of what you can see in bear market rallies. These are huge drop-offs, okay? This is during the dot-com tech bubble bursting. We saw it go from 1380 to 1081, 1315 down to 944, and then rose all the way up. And then we see these massive drop-off, like this one right here that I didn't even draw the arrow for, 1176 to 1074, and then back up again, then to a massive, massive fall. Oof. And then we go back up and retest that low again. So that is just a friendly reminder of what bear market rallies look like. All right, so this is what I'm going to do when I analyze the technicals for the S&P 500. I'm going to go ahead and go from the weekly to the daily to the hourly. I'm going to go ahead and start with the weekly. Look, at last week, I was thinking, hey, this is probably the point where we're going to see a turnaround because of this gigantic reversal candle. It hit this 0.61 or 61% retracement level on the Fibonacci, and that's typically where you'd be starting to see some sort of pullback. But guess what? That was not the case. We see it basically open up here for the week and then shoot all the way back up just about to that 61% retracement level. There was a lot of gap ups, a lot of movement, and it was really driven, I personally believe, by all the tech sector stocks, which looked bearish to begin with. I even did an analysis on Apple, and holy moly, that thing ended up just taking off like a rocket ship. So the question here on this chart is this enough momentum to start moving higher in to this $3,000 range? There is a lot of traders on this eye. I mean, this is a pretty forceful green candle. So, I mean, if we break this and close above the 61% retracement level, I don't see why we couldn't come up here and retouch the high over here to make it I would say, argue it would be like a double top from here and here. That'd be a double top, and then maybe see a push downwards. Or is this retracement level going to just block it and we're going to see some kind of just movements within the channel? I would see that is more likely to see these kind of just trend sideways between the 50 and 61% retracement level. But it's very, very hard to tell at this point in time. So let's go ahead and just hop into the daily time frame to see if it's telling us anything else. All right, so here is the daily time frame. Like I said previously, we are sitting right here at the 61% retracement level on the Fibonacci. I'm going to go ahead and clean the chart up a little bit and just remove that and draw out this trend line. One of my last videos, I was talking about this head and shoulders pattern that was forming. And it's still very possible, but it's kind of wrecked by this previous day. And what I mean here is what we can potentially see, the outcome could be very similar to what the chart has been doing since it reached its bottom there in March. It went up, it pulled back, it went up, it pulled back, it went up, pulled back, and then now it's going back up to that 61% retracement level. So what we need either to see here would be that that was the pullback, and now it's going to move higher into that 3,000 and maybe potentially break above it and then retest back here like I was saying on the weekly chart. Or what we might see is something like this where it gets blocked again, and then if it breaks through this trend line, it depends on what we see happen from that point. If it just comes down and retouches the 50% retracement level, which was right around this area right here, and then retests up here, and then breaks more to the upside, then that is looking extremely bullish. I would definitely think if it does that, we are going to be going to the 3,000 and potentially even higher up to this 3,100 level. Let's call it 3,100. I think it's potentially a little bit higher, but that range. But if we see it retest and it gets rejected, that would be good confirmation for me to see. And by the way, when it gets rejected, it have to fall below the 50% retracement level. I'm gonna actually throw that back up on there so you can see what I'm talking about. Okay, so if it comes back, if it breaks through that trend line, retests the 50%, and then comes back up to this trend line. Now, if it basically gets declined and then pushes itself down the 50% retracement level, that would be my confirmation that it is going to be going lower at that point, where it's starting to really take a curl kind of over and then kind of arch back down to the downside, where we can see some very aggressive moves. However, if it does get rejected and even come back here and then eventually breaks through back up to this trend line, then I could definitely, I would say it's going to be coming up into this range, and I would be then at that point in time waiting for a new opportunity to either enter in short up here more to that double top, which would be up at the 78% retracement level, 3,100, and then that 3,000 range where the 200 period moving average is. I would imagine that it would be very hard to get through that. So there's still a lot of support down here for the bulls. Like I said, we are just trending sideways at this particular point in time within this, between this range of 61% and 50%. So it's going to be some time. It's going to be some more days, weeks before we really start seeing some momentum. But this is coiling up to do something. It's coiling up to be a pretty powerful move, and the fundamentals just are so disconnected from reality. It's very difficult to do any sort of fundamental analysis within these environments. So technicals is all we really have at this point in time. Now, if you're an intraday trader, you can still, like, supports and resistances, they really do hold up in certain areas. So you got to keep a close eye on all of those, because you can make really good scalp trades. I've been doing that, and it's been somewhat pretty successful. So no complaints there. But let's go ahead and zoom in more to the hourly time frame now to see if there's anything else that really stands out to us. All right, so on my last video, I remember talking about this bear pull from this day, and it came down and pulled back, and then it didn't quite fill this gap that was right here at this point. And that, to me, that it didn't close it, and let alone, I mean, I think it did come back to test it after hours, but that's besides the point for me. I don't really look at the after hours all too much. I keep a close eye here, and that's how I read my charts. I mean, I do keep an eye on it, but in this point, I didn't. This area was obviously clearly a big level of support. From here, it gapped up, it acted as resistance right here, and then it came back and almost right there tested it, which to me, that was not, I mean, it was a bearish move to the downside, but because it didn't close the gap, it didn't close that window and close below that support line, I did not see this as a good opportunity to, believe that it's going to be headed short or headed lower. And what did we see the very next day? Just this monster gap up, and it basically was right here above the top channel of that bear flag, and it came up, back down on the 50 period moving average, and then this last trading day, it gapped up again. It gapped up above this area, and now is coming back up to retest the 61% retracement level. Now, I thought that this 61% retracement level was going to be the top, and the reason why is because it had plenty of opportunities to make it and close above it, and it just has not really, it's just been kind of trading in this channel. So we had just one test, And now I'm starting to see this kind of move to the upside where, hey, now let's see what's going to happen. It's Friday, so there could be a lot of news that takes place throughout the weekend. I wish I had, more to say or more to, give you on this, but it really is going to determine what kind of stuff comes out and what's going to push this market more forward or pull back. These crazy gap ups and all this movement here, it really makes me think that it's shaking people out of the markets. It's scaring traders that are long. It's scaring traders that are short, and it's really gearing up for a very, very big move. But when that is, it's very hard to say, and that is just what the market does. The market plays these games, these tricks, and it just makes everyone feels like fools, or makes them feel like the smartest people in the world. So trade with caution. Be cautious. I'm personally not going to be holding any overnight trades at this point in time. I will continue my day trading intraday and just following the momentum where it goes. And until I see a very clear sign that we're going to start seeing this market curl over, that's when I'm going to make my move, and that's when I'm going to attack the short side, because I do think that the market will be heading lower here eventually when the fundamentals, start having an impact on the stock market. That's all I have for you guys today. Sorry I talk really fast. It is what it is. I'm trying my best. Hope you guys have a wonderful weekend. And cheers to you.